Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, July 16th. Hope you guys had a wonderful weekend here. This week we got a few economic news releases scheduled. We'll start off with today's and today we got the retail sales for the month of June. So in May we had a pretty good increase of 0.8%. Forecast supposed to be 0.6%. It came in pretty much in line at 0.5% grew. Now, when you strip out autos, the big ticket items like autos, it can kind of obscure the data. So we kind of look at it's kind of like a core or basis of what we kind of look at. So in May, it had a 0.8% increase, and forecast for June was supposed to be zero point 0.4, even at flat. So it didn't do anything for the month of June. So needless to say, we can say autos had a good record or good sale, uh, good month in sales for the month of June. Now, last but not least, we got the Empire State Index. This is the index for or manufacturing data for the New York region is what this is. And we had a pretty high number here in June at 25. Forecast supposed to be 21. Came in a little higher than forecast, but did drop a little bit down to 22.6 for July. And then this week, basically what we got is starting tomorrow, we got uh, the Fed chief meeting with Senate. He'll be testifying before Senate, and then on Wednesday he's going to meet with the House. So those could be big market movers or create some volatility. We got some housing data coming out this week as well. So those are going to be some of the big items this week moving forward. Today, headline news: stock market is currently down. It started down a little bit further during the Helsinki meeting with the U.S. and Russia. But since then, since that meeting just kind of wrapped it up here a little bit, the Dow kind of improved a little bit, but now I've seen it kind of coming back into negative territory. Now, our Q2 earnings season is coming in well. We're still showing a very uh, strong economy right now, but today the investors are looking more at the geopolitical which is kind of taking over the market today. So, of course, we got the U.S.-Russia meeting that just wrapped up in Helsinki, and then we got and then some other comments that came in. U.S. filed complaint with the WTO, the World Trade Organization, against Canada, China, and EU on the steel tariffs. Basically, they felt that they were in line with being able to raise tariffs on those countries, but it was against uh, non-compliant or whatnot that the other countries retaliated with their own tariffs. So they filed a complaint with the WTO. And then also there were some comments made by the IMF basically stating that they believe the global economy plateaued. So that's obviously not very good because we were just starting to see a nice little spike, and now they're saying it kind of plateaued. So we'll have to kind of see where things move in that direction. So let's kind of move on here to the bond market and take a look here. Bond market is currently down. As you saw, we were testing the ceiling here last week on Friday here, and then since we pulled down, and today we were testing the floor of support here. So we've been kind of, as you can see, for a while here, we've been kind of this range here with this ceiling and this floor of support here between mostly the 25-day moving average here. We've been getting kind of squeezed here, and as the 100-day moving average and the 25 come to a close, we're going to be forced to one direction or the other direction. My guess, personal feeling is that we're going to get pushed lower, just because, as we mentioned before, the Fed has been trying to unload their balance sheet, and with not a lot of demand out there, uh, purchasing because the stock market is doing so well, the bond market keeps coming down. These keep coming downwards, which is driving up interest rates. Since the beginning of the year, we've gone up 0.5% so far. But over this past, 3 weeks or so, we've been kind of this sideways pattern here. Uh, Sideways pattern, so we haven't seen a huge amount of fluctuation in our interest rates over the past 3 weeks. All right, so, but if we do break one way or the other, if we break above this way, we have a lot of room here for improvement. If we break down below, we got a lot of room for the opposite, or it can go into rates could jump up quite a bit. So again, just be very, very cautious here moving forward as these start to close up. It's going to be forced to go one direction or the other. So that can happen up here in the next few days here. As you can see, the Treasury, we got a lot of upside here. Treasury's up, it's at 2.86. It's starting to reach the 25-day moving average, but it does give us a lot of room for mortgage-backed securities to kind of move in different directions. So it could help us out in one way or the other way. All right, so rates are a little worse today than what we saw on Friday. So rates did worsen again today, so they're not as well as what we saw. Sorry about being redundant there, but anyways, I hope you guys enjoy the rest of your day. But if you guys want to get some updates, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do post throughout the day, different bits of information, updates that's driving the markets. If you see some improvement or worsening, you'll know about that throughout the day. Just come over to Twitter at Mike Bjork. All right, folks, have a wonderful rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.